All right, I want to talk to you about some credit card vocabulary, and we're going to look at samples of a couple of credit card statements so that we can see what the wording is and how they're actually calculating the interest. So it's pretty interesting. The first word or phrase that we need is periodic rate. And that is going to be the interest rate. And usually we're dividing the interest rate divided by the number of periods. And that's kind of a weird way to say it, but what the periodic rate is if you have an APR or an annual percentage rate of say 14% on your credit card, the daily rate is going to be a fraction of that, how much is assigned per day. So you would divide by the number of periods. So if you get an annual rate and you're trying to change it to a daily rate, you would divide by the number of days in a month, or in a year, I'm sorry, so like 365, so you might need to write that down, 365 days in a year, and we use that even if it's a leap year for financial math, so just so you know. The next thing is the balance subject to finance or interest charge. Okay, so the balance subject to finance or interest charge, that's if you have a credit card and you leave money on your credit card from, they give you a grace period, so if the statement starts on the 15th of the month and you make a charge on the 30th and then you get your statement on the next 15th of the month, you don't have to pay interest for those 15 days or so that you had that purchase on your card. That's a grace period. And then, but what happens if you leave it on the next month would be that you have a finance charge or an interest charge, they'll call it either one, and that'll be calculated based on how long your money was left on the credit card. Okay, and then a finance charge. Finance charge is just the amount of money that gets charged by a credit card to the person holding the card. So it's money charged to consumer for the loan that you got. So I don't know if you realize, but a credit card is just a revolving credit line. So meaning that you have a maximum that you can borrow up to that value, and you can be anywhere in between there. And so you're allowed to keep charging, but it's basically a loan. So every time you charge something, there could be interest depending on how long you leave the money sitting on the card. Okay, and an interest charge, it's the same thing. It's the same thing as finance charge, there's no difference. And then APR, I mentioned that before, that's annual percentage rate. And it's in a percent form, as it kind of is implied. So you might have like 14.99%, or you might have 9.99%. And the lower rates that you get for APRs for credit cards and so forth are because you have really good credit. So if you have no credit, or you're just starting out, or you have bad credit, you're going to have higher interest rates on your credit cards. What I want you to do now is take a look at the back of a random Visa statement and read how they're explaining right here how they're calculating your finance charge or your interest charge, and they're calling it a finance charge for this credit card. And then look down here, and what I want you to try to do is see if you can figure out how they are coming up with this daily periodic rate and how they are coming up with this finance charge. So you have given to you, this is going to be the APR, and that's the rate for the credit card. So when you get the credit card, that's what you agree to when you get it. Now this average daily balance, that is based on the purchases that you made during the past month. Okay, so you made some purchases, and then you have this daily periodic rate. I want to see if you can figure out how that got calculated, and it's going to be based on either these or based on this. And then also see if you can figure out the finance charge, how it was calculated. And then the same thing for that cash advance. It's a very similar thing. It just has a different daily periodic rate and a different APR here. So those are different than the cash than the purchases APR. Okay, see if you can figure those out.